So that caught my eye. Last Friday's bar down more than 2%. And by far, this is the largest bearish bar that we have ever seen since April bottom. So since this April bottom, we never experienced this kind of the bearish movement. And last Friday was definitely a shock. And there's a lot of the stocks just tanked 10%, more than 10%, especially those extended stocks in the technology sector as well. Taking a look at the volume, look at the supply. So we have a spike of the supply and compared to the past. So since April bottom, we never experienced this kind of the supply before. So bearish movement plus the spike of the supply level, and in fact, this is the highest supply level since April bottom, and also the bearish movement in a day since the April bottom, and that certainly is the bearish movement. And so far, the bear is winning. And if you still recall, we talked about this change of character 2 weeks ago, and this is by far the largest down wave that we have ever seen since April bottom. And we also talk about we should see a test, okay, for this kind of the bearish movement, the change of character, and also the reversal right after this change of character doesn't really make this change of character a violation. It just that it probably still want to have an attempt to push up, to have an attempt to rally up. But this attempt to rally just dies down after a test of 7600. So I thought it's going to be 7700 as long as 7500 can hold it. But look at Fridays. It's very decisive bearish bar, just broke below 7500. And since then, the attempt to rally, that assumptions just fail. And right now, at best, we should see some kind of the consolidation. So that's really just a consolidation between the swing low and also the swing high. Regarding this kind of the movement, like a day minus 2%, more than 2%. Let me see that. Okay, minus 2.64% exactly. So what sort of analog can we refer to? I would say this bar. So 10th of October last year, minus 2.7%, and similar magnitude to the downside. In terms of the supply level, I think this is slightly higher. So compared to this, okay, higher supply level, slightly bearish bar compared to this one. So that's minus 2.6, that's minus 2.7. So look at what happened next. So right after this one day bearish sell off, next day gap up 1.5%. But in terms of next day, so which was yesterday, so Monday, that's also gap up. Actually not a gap up, but just up 0.21%. So this sort of the attempt to rally is a bit weaker, so unlike this bar here. However, what happened next few weeks is the key. So next few weeks we have attempt to rally, breakout, and then volatile periods, and then going into consolidation. So for prolonged periods, I think more than half a year, from October all the way until April, and especially this move here that is very volatile, very bearish. But right after this bar, what we have is just choppy period. So at least you don't need to worry about immediate crash to the downside. So especially we have similar condition. So we have uptrend. This is not considered as a change of character unlike this one, because here is a much bearish movement to the downside. So here is probably by far the largest movement to the downside, and then into a trading range. So no matter how bullish or bearish after this bar, usually it will take some time to form a trading range. So whether it's like a upsloping type or just horizontal type, it's likely going to take a few weeks just to form the structure. So in this case, here is a down move from the top to the low here. It's like minus 6%. So usually that's sort of like a healthy pullback. So right after a extended run. So here is even more overbought, overextended. So I wouldn't be surprised if we get a minus 5 or 6% of the pullback. So far, we didn't even have that kind of the movement to the downside. I would say that's less than 4%, minus 3.7%. Okay, so if we drag it to here, or even 7,200, is somewhere around 5 to 6%. So I wouldn't be that surprised if it could still drop to this level. However, the path to that level, or to have that sort of the magnitude to the downside, there's many variations. So it could have an attempt to rally, so similar to this attempt to rally, breaking out, so attempt to rally, break the higher high, and then eventually have another down move. So that is definitely this sort of the analog back in last year October. So 10th of October is the bar that I want to refer to. Right after that is a sideways consolidation, but eventually what's more important is during this consolidation there will be a lot of the setup show up. So here is also the same. So during a consolidation period, if we really get one, then the most important thing is to find outperforming stocks and then to trade that. So far, I'm still sticking to those technology, whether it's very extended, very overbought, like the memory stocks, Micron, Western Digital, SanDisk, or the optical stocks like AAOI, COHR, CIEN. Those sort of the stocks are still really very resilient, and there is a real demand behind. So the AI is real, and the demand is real. So I still believe that is going to have at least another round of the rally, despite the overextended move. And another analog that I would like to refer to is back in here, 2024, December. So let me just zoom in this bar. So this is the bar, the 1 day movement to the downside, minus 3%. It was very scary, minus 3% in 1 day. So let me just pull this back. Okay. So this sort of the big bearish bar and came with spike of the volume. And that's also after a rally. So this is a rally, high low structure, and suddenly we have this kind of the bearish bar, minus 3%, and then into what? Into a few weeks of the consolidation. But these few weeks of the consolidation actually turned into a distribution. So a breakdown, come back, tested the access line, and then I have a reversal, and I have an acceleration to the downside with increasing of the supply. So this magnitude to the downside is probably around minus 20%. Let me just drag this. Okay, minus 21, 22%. So that is really just a bearish scenario. So under a bullish scenario, we want to just have 5 to 6%, or even up to 8%. So 5 to 8% of the movement to the downside, and then going into consolidation. So During this consolidation period, if it's going to be a distribution sell off, and we will definitely see a lot of the telltale signs, such as a lot of the leaders, outperforming stocks will have a lot of the distribution days, and they will be the first to take a hit. They will be dropping like 30%, 40%, 50%, 60%, 70%. And also, there will be lesser bullish setup because the condition is getting worse and you can hardly find any bullish setups. So this will be the telltale signs, and I think that's very obvious. Is just very straightforward as well. So whenever there is less bullish setup, and also when the structure is breaking down, just like this, with increasing of the supply, fail to rally and show very weak rally and inability to climb back up, and this is sort of expected, the acceleration to the downside, and then eventually into the selling climax. So right now, no matter whether you are using this December 18 bar as an analog, or using the 10th of October bar as an analog, they have similarity. So right after this sort of the bar, usually it will go into a trading range, unless there is some really bad news, whether there is escalation of the war, or whether there is something that we have no idea. So something like a black swan event. Never thought about that. Never hear before. So war is still ongoing, but I think everyone is sort of um, have an expectation. So whether it is still negotiation, or whether there's a drag for a couple of weeks or a couple of months or even years, so it's sort of expected. So what we do not want to see is black swan. So something that we never hear, never think about that, never see before, and then it just happened. That will shock everyone. So usually after that kind of the one bearish day, minus 3%, minus 2.6, 2.7%, here is the consolidation, and you will have plenty of the time to react, whether you still want to be very aggressive to go in. And if the trade doesn't work out, then you will definitely see it um, in your brokerage account, and you definitely want to cut loss. Or you will have some kind of the rotation while it's forming the consolidation, and eventually the market will come back, which I still believe this will be the case. So especially right now, this is a super strong momentum since April bottom, going all the way up. With that kind of the strong momentum, this one day bearish movement doesn't really have a lot of the weight, but the distribution just takes time to build up, especially prior to that. There's a lot of the strong momentum behind, so this is something to take note of. So the first sign we already raised, that is this sort of the change of character wave. So something's different, the largest down wave. And then second is this bar, the Friday's bar, minus 2.7% with increasing of the supply. So first change, second change, but at least we still have the structure intact. So at best, what we have here is consolidation. So this is still a trading range from 7,300 all the way to about 7,600. So we still have a few levels below acted as a support. So that's a swing low supports. That's a 7,300 as a round number, and we have 7,200 as well. So we can just track it to somewhere around maybe 71.50. So that will be the, let me hover it, yeah, somewhere around 71.40 all the way to about 7,200. So there will be another zone. So there will be many zone or support level below, and worst case is likely going to go all the way back to about 7,000, 6,900, and forming a choppy structure and choppy period as well. But first thing, they need to break below the swing low, break below 7,300, break below the 7,200, and also this 7,150. So there will be many support level, support zone below. So far, in terms of the swing, this one day alone, this is oversold. Okay, so that's oversold, and subsequently attempt to rally, but yesterday rally was very weak, to be honest. After this minus 2.6%, yesterday rally only up 0.21%, so that's very weak rally. And look at this rejection tail. If we go into the hourly time frame, look at where it stopped. Here is the where we have a selling accelerated. So this is where the selling pick up. So we have a breakdown, break below, sell off, attempt to rally. So that's a demand tail, and then we have a increasing of the speed. So that's the acceleration to the downside. And yesterday it just stopped right at this resistance level. So if today is going to be bullish, I want to see at least a break above and then into this level, so somewhere around 74 75.40. So Jim say, at what level do you think we have to reach to avoid another drop? um okay, so first, this is the level that I want to see a break above 74.72, so which is the yesterday high. So I need to see a break above for continuation of the rally for today. And then at least we need to show, I want to see the strength behind. So the bullish bar need to be somewhere around 75.40, so extended to about 75.40. But it wouldn't be, I wouldn't want to narrow down to uh, one day movement. So it could take 2 bars, 3 bars to hit that, so 75.50. So if it could just have 1 bar, just reach the 75.50, reach this exercise, I think that will be quite a bullish movement, and this will be the bullish case going into this consolidation movement. However, if today we see another rejection, likely is going to break below the Friday's low or yesterday low and into 7,300. So sometimes it's going to take a few days to just settle down. So especially with this big bearish bar, and it could have another attempt to break down, break below, and to see how much supply left. So whenever there's a breakdown, and a lot of the short seller will join in, and they will be thinking, well, probably this is an AI bubble, and it's going to be dropping all the way to like at least 70,000. So they'll be joining short selling, and also those people catching the low right here. So for example, if you bought on Friday or yesterday, hoping for a reversal, usually the stop will just below the swing low, so somewhere around here, or at best maybe just below 7,300. But that's probably on, for the other stocks there will be a similar swing low structure, and if it breaks down, that will trigger your stop loss, and they will have also increase the acceleration to the downside as well. So it's very important to see if there is going to be another test, a breakdown of the swing low below. So if there is no follow through, this will be a very bullish signal. So a failed breakdown is definitely a bullish signal, and it's definitely going to go up, and at least to have a swing. But slightly longer term, or call it the medium term, here is a structure 7,600 to 7,300. So there's a structure is going to take time to consolidate, just like the analog that we discussed earlier on. So right after this bar, so for example here we have a breakout. So there's strength, and then we have volatile movement coming back down, test a low, and then going up, choppy, chop around, fail to have a continuation of the upside, and eventually we have increasing of the supply. And here there is a deterioration of the market breadth, and also a lot of the weakness show up when it is churning and going nowhere with increasing of the supply. Okay, so right now here is um, here's a attempt to rally. So we want to see a commitment above yesterday high, and ideally want to see a test of this access line 75.40. So before we conclude that it's likely going to be a very healthy consolidation. So this is really a constructive movement if we really get that. Just have a consolidation while to let the outperforming stocks to take a rest, take a pause, and while there is others going into rotation. For example, some of them could be just breaking out from accumulation base, while the extended stocks, for example, the optical stocks, the memory stocks, will just form another structure. So that will be the time that I will be looking at the previous outperforming stocks, like what? Like Intel. So Intel is definitely one of the stocks that I would like to go in. Marvel, ARM. So these are the CPU stocks. So again, looking at this structure, right after the breakout, 50 all the way to about 130, pullback, another rally. So here is probably building up the structure, a failed breakout. So let's see whether it could have some consolidation and eventually just break out. So Intel, Marvel, ARM, there are plenty of them. Also the optical stocks, if we could just form a large flag structure, so this could be a flag structure that will be great for scaling in. So a breakout from there will have resumed the bullish movement to the upside. But right now it's probably too early to tell, unless you just want to have a quick swing to the upside. So that's also possible. So right now S&P 500 is likely going to have an attempt rally. So the swing is probably to the upside, but unless we can commit above yesterday high and going into 75.40, need to watch out for a test or a break below Friday's low into 7300. So that could probably have a fake breakdown and then followed by a real movement to the upside.